Good morning, dear viewers. My name is Clive Thompson. Today is Tuesday, 26th of August, 2025. And what news we have coming out of Washington. I'm here to give you this morning's investment, stock market and financial news from yesterday and this morning. The big news this morning is President Trump has fired Federal Reserve Governor Lisa Cook. She's a top official at the US Central Bank. He's accused her of mortgage fraud. Cook says that the claims are false and that Trump has no power to remove her. This is the first time a US president has tried to fire a Federal Reserve governor. The move raises big questions about whether the Federal Reserve is still independent from politics. The dollar fell, gold rose, and markets are now almost certain that we'll get interest rate cuts. Let's just remember that the Federal Reserve has 7 governors. Within the last couple of weeks, 2 of them dissented about the interest rate decision, the first time in decades that this has happened. So 2 of them fell into the Federal Reserve's, into the President Trump's camp of wanting lower interest rates. Then we had another Federal Reserve governor tender her resignation 5 months before her term was up. She cited that she was going back to academia. You can believe what you want to believe about that comment. And today we've had the firing of Lisa Cook. So that's 4 members of the 7-man board have gone. I am assuming that Lisa Cook will have to go, but I don't know if she's going to challenge that in some way. So that basically means that her replacement will be appointed by President Trump, just as the previous one's replacement was appointed by him. He'll put in place somebody who favors his interest rate policy of not only lower rates, but much lower rates. And that will be 4 people on the Federal Reserve Board of Governors who are in his camp, and therefore we can say that lower rates are almost certain to come. But it does now call into question the independence of the Federal Reserve. International investors will be concerned that the sound money policy, or perhaps not so sound, but pretending to be sound money policy of the United States, might go out of the window. And that's why the dollar is weakening, gold is up, and other currencies are going up against the dollar this morning. Interest rates on bonds have risen very slightly, so there's not much reaction there yet, but it's early days. This news has just come out within minutes of me starting this video. So investors are worrying that President Trump will reshape the Fed with his allies who want lower rates. And analysts are saying that the weaker trust in US institutions like the Federal Reserve, and of course don't forget we saw the head of the Bureau of Labor Statistics fired a week or 2 ago because she delivered results that Mr. Trump didn't like. So investors worry that weaker trust in US institutions could push more people to buy safe haven assets such as gold. Now last week, on Friday, Jerome Powell, who is also under threat from President Trump, Jerome Powell delivered his speech and appeared to pivot. In other words, he accepted the possibility that rates might be reduced in the September meeting. Markets basically saw that as almost a dead cert bet, and the probability of a rate cut at the Federal Reserve is now very high. I'm just looking at the FedWatch figures, and it looks like that the site is down at the moment. A lot of people want to know what's going on. But I would say the probability, which was 87% last week, is probably rising closer to 100% now. So when Jerome Powell signalled that there'd be a possible interest rate cut in September to support jobs. And we know that Mr. Trump wants faster and bigger cuts than the Federal Reserve was planning. And he wants to lower the borrowing costs for the US government and thus manage better the debt payments. Now, even if he gets his wish of lower short-term rates, the Federal Reserve does not set the long-term rates. The Federal Reserve only sets the short-term rate, which might come down. But if people have lost confidence in the Federal Reserve as an independent bank, then the longer-term rates could rise. Now, of course, the Federal Reserve could step in as buyer of the last resort of government bonds. That's not happening yet, and it probably won't happen unless bond yields go much higher. And if the Federal Reserve does do that, which I think will come down the line, it means they'll have to print a lot of money to buy those bonds, flooding the economy with liquidity, which explains why assets like the stock market and gold and others are all on a bull market, because people know this will come sooner or later. It's just a question of when it comes. So the markets might start to lose trust and faith in the ability of the Federal Reserve to keep the dollar reasonably solid. President Trump is also threatening sanctions against European Union officials over a new law being passed in Europe called the Digital Services Act. Now, this Digital Services Act is an act which will force big tech companies, most of which are in the United States, to remove harmful content that's harmful to children or harmful to people in general. And Trump is saying that those people who are involved in passing the law might be sanctioned. Sanction means basically they'll find their bank accounts frozen, they won't be able to access their money, they won't be able to get their salary, they won't be able to spend money, they'll basically be frozen out of the financial system. Their assets could even be seized by the Americans. And we're talking about European officials here. So Trump is basically saying that the law censors Americans and unfairly targets US companies. Well, it's targeting big companies, that's for sure. But of course, the biggest companies in the world are American companies. And he's threatening he's threatening tariffs on those countries which are going to have digital taxes. So the US-EU tensions over tariffs are getting worse. Also in the news today, Elon Musk's AI company, xAI, is suing Apple and OpenAI. Musk says that they made an illegal deal that blocks competition by only promoting ChatGPT on iPhones and Macs while ignoring his Grok chatbot. And Musk wants billions of dollars in damage. Apple and OpenAI, of course, deny any wrongdoing. I'm puzzled because I don't see any problem having Grok on my iPhone. I've got it. I don't see any problem having Grok on my Mac. I've got it. And I use Grok a lot. I think it's a great program, especially if you want to do investment research on a single company. Now, that's not a recommendation for Grok. It's not even a quoted company, but let's just say I don't see the problem. Just because it's not on the iPhone when you buy an iPhone doesn't mean to say you can't download it and get the application, which I've done. So last night, US stocks fell very slightly after they hit the record highs last week, and investors are waiting for Nvidia's earnings, which I think are due out tomorrow, if I'm not mistaken. Nvidia shares keep rising before the report, and people are expecting great things and great results from Nvidia, and the likelihood is that the share price should continue to soar if if the company delivers the results that are widely expected. Now, I do add the word if because maybe the market is expecting too much. But let's say that the results from Nvidia disappoint. What could happen? Well, it could cause a short and sharp and sudden collapse in the stock market. But will that last? Well, we've seen up until now that every time we have a bit of bad news, it's met with a wall of money and people say, I missed buying it last time it was down here. I'm not going to miss it the second time. And they rush in and throw money at the ETFs and markets rise again. So I'm not sure that bad news will damage the stock market that much. Of course, the stock market is very fragile because these large companies, by any measure, are overvalued. Now, overvalued doesn't mean something's going to go down. I mean, I saw that in 1994 when markets were overvalued, and we continued to have a 7-year bull market after that, where stocks just went up year after year, culminating in the dot-com bubble burst in early 2000. And the markets rose hundreds of percent. Maybe it's another I think the Nasdaq went up another 200% before the bubble finally popped. So just because something is overvalued doesn't mean to say it's about to pop and go down. Now, would I buy it? No, I mean, I'm more of a value investor, and I don't think Warren Buffett would buy it. I wouldn't buy an overvalued company, but there's a lot of money out there, and it's got to find a home, and much of that money is going to go into ETFs. And when you buy shares in an ETF, the ETF manager has no choice but to buy shares in the largest companies on the stock market, of which Nvidia would be one, as an example. After that rant about overvalued market, let's just talk about a bit of the news here. Keurig Dr. Pepper has announced it's going to buy a coffee company called JDE Peet for $18 billion. Dr. Pepper shares fell on the news. Another bit of news, Crescent Energy will merge with Vital Energy in a $3.1 billion deal. What else have we got going on? Home sales in the United States slipped a little. Oil prices rose a little. They say the reason was Russian supply disruptions. Gold and silver both moved higher on this news about Lisa Cook being fired from the Federal Reserve. Obviously, the independence of the Federal Reserve is under question. And I'm just looking at the gold price now. It's 3373, up $7. It's not very much up. And the silver price is what's the silver price? XAG USD. It's $38.80. So it looks like gold should go through the $3,400 mark. I'm guessing it will in the coming days, and silver should go through the $39 mark. Hopefully that would push those prices higher for the gold and silver bulls. In the Australian market, stocks this morning, stocks have been falling. Gold stocks were off a little in early trading, except for one, and that's the one which I recommended in my recent video on gold miners. I didn't recommend it. I said it was one which I liked a lot out of the various gold miners I reviewed. I identified two. One of them was this company, Ramelius Resources. So the Australian gold miner, Ramelius Resources, which bought Spartan Resources earlier this year for $2.4 billion, has just announced its results. The results are outstanding. Gold output is up a lot. It's 302,000 ounces of gold. And they say that they're going to hit 500,000 ounces of gold production by 2030. So going from 302,000 in the latest results to 500 by 2030. Their revenue, Ramelius Resources revenue jumped 36% to 1.2 billion. Net profit more than doubled to 474 billion. Cash flow, positive cash flow, was 695 million. The company has now got over 800 million in cash and gold, and they've increased the dividend by 60%. So all in all, that was a good call by me a week or so ago in my gold miners video. If you want to see the other stock which was recommended, you can go and watch that video. Ladies and gentlemen, my name is Clive Thompson. Thank you very much for tuning in. I'll try and answer any comments you've got in the coming hours. I sometimes get many hundreds of comments, so please excuse me if I can't answer everyone, but I'll try and answer as many as I can, and certainly the most interesting comments. And also, if you like to see more of these videos, just click the subscribe button, click the little bell if you want to be notified of it, and give me a like if you want. Thank you very much, everybody, and I'll speak to you tomorrow. Bye-bye now.